This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. U.S. crude stocks fell while gasoline and distillate inventories rose, the Energy Information Administration said on Wednesday. Crude inventories fell by 2.1 million barrels in the week to December 31 to 417.9 million barrels, compared with analysts' expectations in a Reuters poll for a 3.3 million barrel drop. Crude stocks at the Cushing, Oklahoma, delivery hub rose by 2.6 million barrels in the last week, AIA said. Refinery crude runs rose by 164,000 barrels per day in the last week, AIA said. Refinery utilization rates rose by 0.1 percentage points in the week.
Indonesian authorities postponed a meeting with coal mining companies on Wednesday, as scores of ships moored off the coast remained in limbo as they waited to see whether the government would lift a ban on coal exports. The government has said it would review the ban on Wednesday and was due to meet mining companies in the morning ahead of a decision, which is keenly awaited by top economies in the region that rely on Indonesian supplies. However, officials at the Indonesian Coal Miners Association, ICMA, said a planned meeting with Trade Minister Muhammad Lutfi had not taken place. They did not say why the meeting was postponed and added no new time had been agreed.
Moving on to the top news in the energy sector.
Malaysia plans to implement its nationwide adoption of the B20 palm oil biofuel program by the end of 2022, the country's palm oil board said on Wednesday. The mandate to manufacture biofuel with a 20% palm oil component, known as B20 for the transport sector, was first rolled out in January 2020, but faced delays due to movement curbs imposed to contain coronavirus outbreaks. We will do it stage by stage basis depending on the government's financial capabilities, Ravi Muthaiya, the Commodities Ministry's Secretary General, said during a seminar.
Venezuela last year halted the steep drop in oil exports that had crimped state oil firm PDVSA's ability to pay suppliers and sustain output, data from Refinitiv Econ and Tanker Tracking showed, ending a 4-year free fall in its top income source. The OPEC nation, which has been hit with U.S. oil sanctions since 2019 intended to oust socialist President Nicolas Maduro, eked out a less than 1% increase in average exports for the year, the data showed. Most of the cargoes have gone to buyers in China, according to Reuters research. Venezuela has skirted sanctions by blurring tanker identities and enlarging its chain of intermediaries. It also struck a supply deal with Iran for diluents needed to convert its extra heavy oil into exportable grades. The export gains have helped PDVSA pay service firms that have stabilized oilfield production.
Next, we have the top news in metal.
Aluminium prices rose on Wednesday to their highest in more than 2 months as expectations of large deficits were reinforced by high power prices, particularly in Europe, and sliding stocks. Benchmark aluminium on the London Metal Exchange traded up 1.5% at $2,883 a ton in official rings, having earlier touched $2,895, its highest since October 26 and a rise of more than 10% since November 5. There is no quick, permanent solution to the European power crisis. Even if prices ease, it doesn't mean risks are dissipating, said ING analyst Wenyu Yao.
Chilean lawmakers went to court on Tuesday to stop the outgoing government from taking bids for lithium mining contracts, with SQM and Albemarle, the world's 2 largest producers of the ultralight battery metal, in the running. Lawmakers from the center-left opposition party PPD asked the Santiago Court of Appeals to stop the surprise bidding process, which will end in mid-January. It has been criticized by people close to President-elect Gabriel Boric, who has said Chile should not repeat its historic mistake of privatizing resources such as lithium, a vital ingredient of electric car batteries. We will now look at the top news in the agricultural sector. The United States will issue new rules and $1 billion in funding this year to support independent meat processors and ranchers as part of a plan to address a lack of meaningful competition in the meat sector, President Joe Biden said on Monday. The initiative comes amid rising concerns that a handful of big beef pork and poultry companies have too much control over the American meat market, allowing them to dictate wholesale and retail pricing to profit at the expense of their suppliers and customers. Capitalism without competition isn't capitalism. It's exploitation, Biden said. That's what we're seeing in meat and poultry industries now.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.